Right, Varun Saboo is well joins in the show right now from Anand Rathi and to talk about what his opinion is in the markets right now. Varun, hi, good afternoon. Good to have you on the show. Seems like some stability is finally coming back to the market, some reprieve as well that the RBI has paused, although it's not a pivot, very categorically clarified by the governor as well today. Wanted to understand what are some of the recent house buy calls that you have.
Yeah, hi. Thank you again, ET Now, for inviting us, and very happy to come and share our views here. So you're absolutely right that RBI has paused finally, and if you see, for the last several times, we are seeing that RBI has been taking the most prudent steps versus all the other central bankers which we see. Basis this event, I think your way of positioning your portfolio changes completely. I think one has to be positive on rate sensitives from here. Particularly, I would say NBFCs has to be the priority in the order. In my view, stocks like Mahindra Finance and certain housing finance companies could be interesting from here. Something like a Canfin Homes, which one should look at. Keeping aside the banking pack, I think the rally from here would be more skewed towards NBFCs, which were not performing for a while. I think real estate companies will remain in focus for some time now. We are not sure if the pivot starts, but at least we have paused. So even if we have a perspective in mind that next 6 months, 9 months we remain here, at least these stocks don't have any negative triggers anymore, and these sectors were under some kind of stress. So I would probably bet more on the rate sensitives one, and second also I would be a little more positive on the Indian IT pack, considering that there is too much pessimism which is already built in. So there is a lot of there are a lot of negatives which people keep talking about, how US is shaping up, etc. But if you hear the commentary, particularly after Accenture numbers and the way they spoke about the environment, and also in our interactions with most companies, we don't see that kind of negatives being built in. So I would be more constructive on these spaces rather than being negative overall.
Farooq, do you have a house view on Nykaa? What's the recommendation there? Because we got the update, which wasn't looking too bad. Of course, in the fashion segment, there was a bit of a slowdown, but now there is more competition coming in from Reliance, etc., as well, coming into the forefront when it comes to the cosmetic space. Your take?
So yeah, my big worry would be Reliance entering the space, and so far there was no competition. So you had no one as a threat, right? And when Reliance has, if you see the track record of Reliance, whenever they enter into an industry, there is some disruption you see across players. We have seen the classic example is what we have seen in the in the telecom space to begin with, and now with the way Geo has been entering into every space that we see. So that is a little bit of a worry. I would probably say to be neutral or avoid Nykaa at current levels.
Neutral or avoid at current levels, but what about the other retail stocks? Because I remember you were quite positive on Arvind Fashions, etc. as well. How does it compare with its peers, Shopper Stop, etc.?
So I'm very, very positive on urban fashion still. See, you have to realize that the kind of brands they have and the way they're progressing on them is very impressive. They have top six brands. Their key six brands are the ones which are just firing, and they're doing so well. So if we see US Polo, if we see Arrow, if we see Tommy, any of them, CK, etc., they're doing exceedingly well. So I don't see any concern related to Reliance entering into retail and that having any impact. And keeping that aside, if you see the kind of ROCs they're making on their individual brands is also very impressive, and the growth rates, etc., that they are seeing versus all other retail players, it's very impressive. So this company had done some restructuring. They had committed some things in 2020, if I remember roughly, to the investor community. They have literally done everything what they had promised. Going to be turning net cash also very soon, cash flow positive. So it's a very, very interesting play available at literally half the valuations of all other players. A very impressive company. I think at 6, 7 times EV EBITDA, you have nothing to lose with. This can be a potential multi-bagger from here.
Also wondering, Varun, as to what could be the other side of a strong competitor or a strong force in the market like a Tira, coming in, and what would it then spell for the likes of Nykaa?
Yeah, so my whole worry is the competitive intensity. So far, there was no pressure on pricing. I'm just worried how that would play over, what kind of competition you'll see on that front, and the aggression there. So that is the worry which I would be a little aware of, and that's what I'm saying. There are much better plays to look at. If you have to play retail, a much better play is urban fashion. So I would suggest to be in there rather than playing anything else.
That's about Nika and the retail space. But quickly a word on QSR as well, so that we can complete the entire discretionary spend. Take here as well, because the QSR space is also getting heated up. Papa John's is coming into the forefront when it comes to the pizza space. Do you believe competition is going to get heated up there as well, or Jubilant continues to be the leader there?
I think Jubilant is a great play, but unfortunately, in the recent times, you're seeing many other alternatives coming, as you're rightly mentioning. The problem here is that the space is also slowing down to an extent. So we have heard, so from our channel checks, etc., what we understand, that things are going quite slow. So we will wait for some pickup to show in the QSR space, and then we really look at any picks over there. But yeah, for the near term, I think there is some time before which one should take entry here.
Come next week, and of course, it's going to be full tilt that we're going to take towards the earnings. You've got TCS coming out with its numbers on 12th, Infineon 13th, HDFC Bank on 15th April. So yeah, earnings are going to be hitting us thick and fast. But Anisha, you do track the IT sector. Tell us broadly, what are the expectations from the large cap IT players? It's going to be a bit muted. At least the revenue growth is something that people are not very, banking big on, because it's going to be a slower quarter. But at least margin will improve on a sequential basis, just marginally so. That's something that we're watching out for. Dealing is the thing that I want to watch out for, because the expectation was it's going to slow down, but the numbers from Accenture really surprised us positively when the book to bill had suddenly spiked, and they talked about how things were actually moving towards large deals. So that will be my focus area this time around, as to whether the large deal momentum continues or not. And then, of course, the commentary from the management regarding FY24 will be very important, because till now they haven't really taken a stance either way. They have been saying that things have been status quo, but since then there has been the debacle of SVB when it comes to US as well, plus a lot of other banking names have been hit through a lot of crisis. So the commentary on that will be really important. But the street is going pretty much muted with the expectations that it's going to be a tepid quarter, but now valuations too have become a lot more comfortable. So very interestingly poised as far as IT is concerned. And I think that will be one sector which the street will be eyeing out very closely when it comes to the earnings season. Oh yeah, absolutely. Varun, what's your take though? Does it seem like the worst could be in the price, or well in the price by now for IT?
So I totally agree that one will have to monitor how the large deal wins would pan out, and also how the commentary for the next year is going to be. The point which I want to highlight over here to your listeners is that there is too much pessimism which is already built in. People have been gravely concerned about how things are shaping up for the US banks, etc. While on the other hand, if we see there is a lot of resolution which keeps happening. So I would like to highlight, since post Lehman, I remember there is not a single bank whenever it goes down that a government or any of their regulators don't come and save it. So every time there is someone who comes and saves it. So I don't see things to be as gloomy as the street had been painting so far for them. So I don't see that commentary will be too weak in my view. I think commentary would be reasonably decent. And I would be quite optimistic on the IT space versus being negative.
Optimistic on the IT space, but what about the infrastructure sector? And let me bring on board Naresh as well. Naresh, apart from L&T, which are the other counters you would recommend from the infrastructure basket?
So, say it has always been about three names in the large caps, which is ABB, Siemens, and L&T. So, out here, ABB tried to give a breakout today, did not sustain well, but that is something which should continue going forward. So, ABB is a fresh 52-week high today. That looks interesting. Apart from that, one can look at, say, PHEL, which is a very surprising one, given the fact that the stock has done nothing for the last few years. But that's a risk reward trade out here at 70 bucks. That could surprise on the upside. Bharat Electronics as well, which is a mix of defense. That is pretty promising. Saw a huge volume bump up. And then one can go towards road infra names, which have clearly shown a lot of resilience as well as performance. So NCC continues to make 52-week high. Today we see HG Infra making a new 52-week high and all-time high. We saw a breakout in Ahluwalia contracts as well. So the road infra space looks interesting. That is where one could focus on. So at current levels, Ahluwalia contract looks interesting out of the names.
Okay. Interesting take coming in there on a bunch of stocks which are looking ripe for a trade right now. What's not looking out well today is HCL Technologies. That's a laggard in trade. There's of course Vedanta, which is ex-div. That's down 5.5%. Dabur after its quarterly update, and I want to in fact check in on Marico as well, whether there is any rub off from what Dabur's Q4 update has been. Yes, Marico as well has been a laggard, about 1% lower for Marico too. Page Industries, Bata, so some of these discretionary spend names are the ones which are actually the laggards in today's trading session. Reliance, after that big bang move coming in on Friday, that hasn't seen much of a follow through. Not the case yesterday, not the case today. It's holding marginally higher, 23.53 thereabouts is where that stock is. SBI less than 1% higher, and then L&T after that big breakout on the stock yesterday. Today too it's seeing a follow through, but not as strong. Still holding up 0.6%. Kunal, still tradable on L&T, still a buy?
Yeah, I think it still be a buy. Till the time the stock gains momentum, stays above the key support levels, the buyers would remain bullish on L&T. We are now talking of the stock breaking past about the 2,300 mark potentially, and that could also earmark a fresh lifetime high for L&T. So that's a remarkable comeback for the stock. It has this very odd tendency of whenever the stock breaks past about the previous highs, it tends to climb up by at least 100, 120 odd rupees in a very short span of time before it gets into a consolidation. The same happened with L&T in the month of January. Prior to that, in the second half of 2022, we saw a similar pattern for the stock price. So we can expect something very similar, that assuming the stock breaks past about the 2,300 mark, we can expect at least a quick 100 to 120 pound uptick for the stock settles into a trading range.
Coming in on some of these other names as well, but Varun, recently you also came out, at the house also came out with a very positive recommendation on Poonawalla FinCorp, wherein you're suggesting an upside of almost 40 to 50%. What's the rationale there?
So we are very positive on fintech, and we remain very positive on an online kind of financials. So that is our thesis, and we believe that they are shaping up to be quite well. And versus how the other traditional players are doing, they would gain a lot of ground, and that their book size also in their favor. So I think this is a great play to look at from here. And it's a great management, by the way, just to highlight.
Okay, so that's the take coming in on Poonawalla FinCorp as well. But as a house view, what are the other top recommendations wherein you see sizable upside or potential multi-baggers?
So as I mentioned to you, interest rate sensitives are the ones which we're very positive on. On the construction side, we're very bullish on PNC, KNR, where we see significant upsides from here, and also NG Infra, which we are very positive on. So our positive stance is on NBFCs from here, real estate, construction, and to an extent IT. So that's what we are being more bullish on.
Right, okay. Varun, I also wanted to get your sense in on what you're making of realty right now. I was just looking at the Q4 updates coming in from Phoenix Mills for that matter, and their footfall data, etc., seems pretty strong. The collection data as well is looking up. That aside, the realty plays, news reports are indicating that rentals have come in much higher and have seen a big jump up in regions like Bangalore. We already know what's happening with markets like Mumbai as well as Delhi and NCR. But would you still have your preference, if at all, towards the low leveraged, low debt balance sheet names when it comes to realty, like a DLF?
Yes, absolutely. We're very positive on DLF also from here. So as I'm mentioning to you, what is acting as a further trigger from here is RBI's move today, which is pausing, and hopefully they start pivoting also, and which will be the big trigger for real estate sector. So there was some concerns which are getting built, because of which the sector had come under pressure when interest rates were rising. But on the other hand, if on the ground we see business has been stellar, right? If you see the kind of sales that they are reporting, DLF launched that property in Gurgaon, and it got sold in a day, some 8,000 crores worth, right? The kind of sales you're seeing is nowhere reflecting in the stock prices so far. I think there are significant upsides in the real estate side. If we start pivoting, this is the sector to be in.
If we start pivoting, real estate is the sector which can be the maximum beneficiary of that. Well, let's go across to my colleague Lisa and talk about the dairy sector as well, because India might be looking at importing dairy products like butter and ghee amid supply constraint due to stagnant milk production in FY23. Lisa is joining us with more details on that.
As we know that India is the highest milk producer in the world, contributing around 24% of the global output. But this year, India has seen a stagnant growth in the milk production as against the demand. The demand has clearly outstripped as it has grown like around 8 to 10%. And the reason for the stagnant milk production was owing to the lumpy disease which affected the cattle and led to their death. So on the back of this, the stocks of butter, ghee, they have fallen to half from last year level. So the government, in order to fill in the supply, they are mulling over importing the products which are mass consumed, that is butter and ghee. If we see that in the last 10 years, they have not imported these kind of products. They have usually imported high value products like as in specialty cheese. So the reason for the stagnant production has led to the shortage in the milk and also increase in the fodder cost, which have led to increase in the milk prices and the hikes have been taken by players like Mother Dairy and Amul. They have increased the prices several times this year. The range has been around 15 to 20% this year, and the hikes are expected to continue till till September, October this year. So the government is expected to take a decision after assessing the stockpiles, and as per the sources, they are in advanced stage of importing these mass products of milk items. But they say that the selling prices that will remain in line with the domestic prices as they don't want to affect the farmers' interest. So this is a news to watch out for as this may cool down the already inflated high milk prices.
Well, that's what we're hoping for, because 15% rise in a year is the maximum rise that we have seen in a decade when it comes to the retail milk prices. So some softening there would definitely be welcomed as well. But for the markets, it's pretty much okay. 17,596 has been maintained for now. It's the Sensex which is up a good 140 points, and the broader markets are clearly outperforming today because the mid cap and the small cap index are eking out gains which are higher at than the index level as well. Stock specific, not big movers, but of course Avenue Supermarts is down about 5%, and then a couple of the other FMCG names as we were pointing out. Varun, the valuations in Avenue, do they still look very expensive?
They do actually. So if you see in this current environment where we are struggling for ideas, any company which is trading upwards of 50 times doesn't make sense at all to me. And this is not a time to play growth stocks, right? This is a time to figure out where valuations are comfortable, and you would look at those names. So that's why when I mentioned to you, when I say that in NBFCs, if one has to look at something like a Mahindra Finance, I mean, that gives you a lot of comfort on the valuation front also. So in any space for that matter, one has to look for where comfort in terms of valuations is there. In the current circumstance, we will be in a very different mode once the entire global markets and everything starts moving higher. But right now, the scenario is quite different.
Since we're talking about valuations, will you look at the beaten down sectors, the likes of power sector as well, or not getting into the, let's say, the publicly sector, stocks?
No, I think avoid that for now. Our focus will be more, as I mentioned today. I mean, the thesis changes once your rate environment changes, and that's why I'm emphasizing again that we'll be more bullish on the interest rate related companies more, rate sensitives more.
Right. Okay. Let's just see some of the other buzzers in trade and as to what's been holding up. Of course, it's, you can't take your eyes off from what a Godrej Properties, a Chola Finance, or for that matter, what an IEX has been up to. But a couple of other buzzers in trade as well. Adani Enterprises too holding out. There's ABFRL as well, which is looking smart. M&M Finance is looking very smart as well. Oberoi Realty has been holding out very well. There's Canfin Homes, which is looking smart. DLF is seeing a bump up of about almost 4%. There's SBI Cards, LIC Housing, Tata Motors as well, which is holding out well in trade. And then you are seeing a bit of a bounce come in on L&T Finance, on a BHEL as well. These are all stocks which are holding out well as we speak. Having said that, there is a short pile up when it comes to a Bata, Emphasis, Bosch, Techem, ONGC is down, LTIM, UBL, Axis Bank, 8 Cell Technologies, and Page Industries. These are some of the laggards and pressure points as well that you're currently seeing in trade right now. And data has been suggesting that there is a bit of a short covering on an Astral, on an MGL, RT Industries as well. And then HAL, which has had a bit of a choppy ride. Right now it's spiking up again about 1.7% in trade as we speak right now. Kunal, just a couple of buzzers in here. Some of the gas names which have been very active off late, MGL, IGL, both on the charts.
Yeah, I think very excellent charts, Aisha, for both of these names because these stocks are typically very high beta names. In fact, we've seen so many of the times that these stocks have actually given false breakouts for themselves, and then the correction has been quite sharp. In fact, just about I think last week or so, maybe start of this truncated week, IGL, MGL as well as Gujarat Gas, these stocks have gone into a correction. So they enter into this week going into a corrective phase, but they are literally exiting this week going into a breakout mode for themselves. IGL and MGL both tend to be one of the stronger names, at least in terms of the recent chart patterns for themselves. And Gujarat Gas has been an underperformer. But looking at the last 2 weeks of price history, it indicates that the momentum is intact for these names. So I would look to build long positions with these names. I'd say it would be preferred bet amongst the gas stocks, 3 names to mention.
So that's where coming in on some of these gas distribution names. Varun, do you have a view on them or even cement for that matter? What are you expecting from the sector as far as this earnings is concerned?
So one on the gas names, we are positive. We are more positive on GAIL and GSPL as a house. On the cement side, we remain. If you remember the last conversation also, which I had on your show, we had mentioned that we remain quite constructive on the cement space. What is happening there is that you're seeing costs which have come down sharply. So there's going to be a EBITDA per ton expansion this quarter, next quarter as well, as per what is happening. So there could be a sharp uptick of 300-350 rupees per ton, which we are expecting to happen this and next quarter. Plus, there have been a lot of efforts by the company to raise prices. Unfortunately, so far it was not sailing through. But what we understand is that so from our channel checks that there were some price hikes which were attempted last week, and a part of it is sailing through. So we'll get a better sense on that in the next couple of days. But yeah, we remain quite constructive. Irrespective, costs are coming off and EBITDA per ton is shooting up for the sector. Volumes are remaining good here.
Okay. Varun, we'll let you go on that note. Thanks as always for taking the time out and joining in.
Thank you so
Have a
much.
good weekend. Let's take some BTST trading ideas before we